Welcome, and thank you for joining today's live SBA web conference. Before we begin, please ensure you have opened both the WebEx participant and chat panels by using the associated icons located at the bottom of your screen. Note that all audio connections are muted at this time. You are welcome to submit written questions during the presentation, and these will be addressed during Q&A. To submit a question, select All Panelists from the drop-down menu in the chat panel, enter your question in the message box provided, and send. If you require technical assistance, please send a chat to the event producer. With that, I'll turn the conference over to Chris Eischen. Chris, please go ahead.
Thank you, Carla. Hello, everyone, and welcome to SBA's first Wednesday webinar series. Just last week, we celebrated Independence Day, and that is the reason we are hosting this session on the second Wednesday this month. In recognition of those who have sacrificed their lives for our freedom, I would like to share a quote by Ronald Reagan. "Freedom is never more than one generation away from extinction. We didn't pass it on to our children in the bloodstream. It must be fought for, protected, and handed on for them to do the same." Independence Day is a time to celebrate this great nation and honor those who have served our country while dedicating their lives to defend peace and freedom around the world. So if you are a veteran or active military, thank you for your service. On to slide 2. For today's session, we will be focusing on the Service-Disabled Veteran-Owned Small Business Program. And by the end of the program, you should have a better understanding of this topic as well as the resources available to you. If you are new to our event, this is a webinar series that focuses on getting subject matter experts on specific small business topics such as the SDVOSB program and having them provide you with the valuable information you can use in the performance of your job. We appreciate you taking the time to participate in this FY19 program, and we hope that you benefit from today's session. Now for a little background on the First Wednesday program. The program was initially created for contracting staff, which is why the training was called 1102 First Wednesday. The 1102 designated government series for contracting personnel was later dropped to be more inclusive of other GS series as federal agencies increased their requirements for non-1102s to obtain DIWEA and FACSI certifications. Additionally, other federal buying activities, SBA staff, PTAC, and SBDC personnel who, after hearing about the training, requested access and were added to the list of participants. So that is why SBA's First Wednesday program is aimed at federal government employees and our resource partners like PTACs and SBDCs. Thank you to those of you who are repeat attendees, and welcome to those of you who are new to the program. Slide 3. As Carla mentioned, I am Chris Eischen, and I work as a Procurement Center Representative, or PCR, in Kansas City, Missouri. Additionally, Ms. Gwen Davis, who is the PCR in Minneapolis, Minnesota, will be reading your questions submitted during the program for our speaker to address at the end of today's session. We also both work in Government Contracting Area 4, and Slide 3 includes our information. Slide 4. Please note that all lines are on mute. However, you may submit questions or technical issues in the chat box on your screen. Your questions may be submitted anytime during today's session by entering them into the chat box, and these questions will be addressed at the end of our speaker's presentation. To make sure your question doesn't get overlooked, please ensure it is addressed to all panelists on the drop-down and not just to one individual. As most of you know, we have transitioned to WebEx and have been informed that some users may experience issues such as a blocked website or other error messages when attempting to access the conference login from their computer. If you are affected by this issue, please make sure you dial in and follow along with the slides provided in this email. We will ensure the page numbers are clearly stated so you can follow along. We are hopeful this issue will be resolved soon, and we apologize for any inconvenience. Now, if you are having any other technical issues, please call the AT&T support desk at the following number, 1-888-796-6118. This telephone number is also included in the email invitation for today's program and on slide 4 of the PowerPoint presentation. Otherwise, just keep listening in and follow along with the PowerPoint presentation. For more SBA Small Business Program training and additional resources, please visit the SBA Learning Center at www.sba.gov. On to slide 5. Did you know that the Association of Procurement Technical Assistance Centers, or APTAC, hosts a website where they post First Wednesday programs? Since these sessions are being recorded, you can re-listen to this program as well as previous sessions by visiting their website, which is provided here on Slide 5. Additionally, Procurement Technical Assistance Centers, or PTACs, are a great resource in partnering with your local PTAC for an industry day, sharing RFI notices, or a source of sought announcement, or simply referring small business concerns to a PTAC are just a few reasons why they are such a useful resource for acquisition personnel. Please contact your local PTAC for additional information. Slide 6, which is the program schedule for fiscal year 2019. And as you'll notice, today's session on the Service Disabled Veteran-Owned Program is the 10th topic in the series. You will notice that we only have one session remaining on our FY19 calendar, and due to speaker availability, we will be holding this session on the second Wednesday in August, which will be August 14th. The email invitation for this session will be sent out in a few weeks. Another questions we have, some of you have inquired as why we don't offer sessions in September, and the reason is that we understand that most of you are occupied with year-end requirements and do not have the time for the training. So in order to use everyone's time more efficiently, we forego this training sessions in September. We will advise you of the upcoming fiscal year 2020 schedule sometime in late September when we send out the email invitation for the October training session. On to Slide 7. I'm sure several of you want to receive credit for today's training, so you'll be glad to know that today's session is worth 1 CLP. On the following slide, which is Slide 8, you will find the training certificate, and I will go over the instructions when we get there. Several of you may have received the information for this training from a friend or colleague, but if you want to receive an email directly from us notifying you of upcoming First Wednesday webinar events, just send us an email at sbalearning@sba.gov. That is SBALEARNING@sba.gov. In the subject line, please enter the words Add to List, and we'll ensure you're added to the distribution list. Slide 8, you will see the certificate. First, you will need to access the PowerPoint presentation that was part of the SBA email invitation you received for today's session. Then go to Slide 8. You will manually fill in your name where it states, Insert your name here. Next, within the print settings, you will select Print Current Slide, which will allow for only the certificate to be printed. Once this is done, you can coordinate the CLP achievement through your training program. Please note that SBA does not track your CLPs or communicate with your training program coordinator regarding your CLP achievements. On to Slide 9. Today's training has been assembled to address service-disabled veteran-owned small business concerns, as well as provide you with additional resources available for your use. Our speaker has graciously accepted our invitation, and he will be directing me to continue on to the next slide. As mentioned earlier, if you are unable to access WebEx, please follow along with the PowerPoint presentation that was included in the email for today's training. We will identify the page number so you can follow along. Also, please note that some viewers may experience a delay as a slide changes on your screen. Now I am pleased to introduce today's speaker to you, Mr. Christopher Clark, who is an attorney advisor for SBA's Office of Government Counsel. We appreciate that you can meet with us today, Chris, and I'll turn the program over to you now.
Hi, I hope everyone can hear me. My name is Christopher Clark. I'm an attorney with SBA. I work in our Division of Procurement Law, and in that role, I serve a lot of different functions. One of my primary roles is as basically counsel to our procurement programs, and I've been primary counsel to the SDVO program at SBA since about 2010, so basically since then. I also, in the capacity as counsel, give advice to SBA on its own contracting and various other aspects. But at least for today, I give advice to the program office that does SDVO. I've been doing that for a while now. So with regard to what we'll be talking about, if you have questions, please ask. I know most of the answers. If I can answer them, I will. With regard to like our regulations and everything that happened, if you have questions, please ask. I very familiar with them. So I'm going to go over it kind of generally with the expectation that people will probably have questions. If you have questions, please ask them. So I'll give a general overview of SBA's kind of view of it and kind of some recent developments in the program. So we can go on to slide 10. Topic. Slide 11. So just because I never know how versed people are, so when you say SDVO, small business programming, it's one of the few socioeconomic programs that has a very confusing nature because there's two programs. There's one authorized under the Small Business Act that's administered by SBA, and that program is government-wide. That's mostly what I'm going to be covering today because it's SBA. The key things that you'll notice with that is that's pretty much every agency for the government. Big thing is it's similar to like basically our small business contracting program in that it's self-certification with status, protest, and appeals for determining eligibility. So we don't pre-screen people before they're eligible for the program, pretty much like we don't pre-screen all small businesses, but we do, SBA is the final arbiter of who is eligible for our program, and we do that through status, protest, and appeals. The other thing that's important to remember is it has parity with the other socioeconomic programs. So there's that. And then here's my brief overview of the VA program, but remember, I don't work for VA. So it only applies to VA contracting. And I'm just going to pre-answer this question. I often get the question, because it does kind of intersect with SBA's program, is what about when a contracting agency other than VA is basically contracting on behalf of VA using VA money? SBA's position on that is if they set it aside there's no prohibition of another government agency setting it aside under the Small Business Act. So if we get a protest or something other than that, we're going to handle that. Whether or not that was proper under VA's act is a question for VA and the contracting agency. SBA doesn't opine on the specific actions of other agencies. The other key component is that firms under the VA program have to be pre-screened by VA. They call it verification. So you basically have to submit an application and demonstrate prior to entering the program that you're eligible to VA. They also have status, protests, and appeals on individual contracts, but in a weird twist of fate because of Congress, those are heard at SBA, but in a different office that handles SBA's status protests. So those are all handled by SBA's Office of Hearing and Appeals. And then the other key core component is for the Veteran Preference Program at VA. There's not parity with SBA's program. There's actually a statutory preference for the veteran-owned and service-disabled veteran-owned. And then the last thing is something that's pretty recent, just for fiscal year 2019, which is per a request/order by Congress. SBA and VA basically merged some of their common elements in terms of requirements for the program, which is the core elements of the program are basically, without getting too much into it, the first and foremost is the business has to be a small business. That's not really covered, but that's kind of the primary requirement. You have to start there. Then the next requirement is demonstrating that you're owned by a service-disabled veteran and that you're controlled by service-disabled veterans. And as of October 1, 2018, there's a common set of regulations for that. VA and SBA basically share the same regs. They're housed in SBA's part of the CFR. So in 13 CFR Part 125, that's where the common regulations for both programs are situated, and VA changed their regulations to have cross-references to ours. So SBA worked with VA in drafting those regulations, but we basically thought it made more sense to put, instead of like duplicating them in two places, basically housing them in one section. So on to slide 12. So I mentioned it earlier, but these are the basically core components for SBA's program, that there be a veteran or veterans with a service-connected disability, that the service-disabled veterans directly and unconditionally own at least 51% of the concern, and that service-disabled veterans control the concern, and that they be a small business concern. Slide 13. So sometimes it comes up, like people ask SBA, well, who's a service-disabled veteran? And SBA's response is whoever other agencies say is, but we have a definition, so I just put in the definition. So this is the definition, is basically in order to basically be considered a service-disabled veteran, SBA doesn't get into the specifics of it, but we do require that you provide proof. And here's some of the things that you can give. But generally, 95% of the time, it's a letter from the from the VA stating that you have a service-connected disability. Page 14, slide 14. Oh, I had a question. So I see questions coming in. Is it better to answer them at the end or when we're there?
Chris, if you want to wait till the end of the program, we can do that then. We'll just get a summary of them all. Okay. That's good for me. I'm indifferent either way, but if you have a question, put it up. Okay. So some of the key issues with ownership is, depending on how much you've been involved in small business contracting, who owns things is not as simple as people generally think about it. So one of the key aspects of most of our programs is that SBA actually requires that a participant in our program be directly owned by the service-disabled veteran. So this means that you can't basically have a holding company, so or certain types of trust. But the general rule is, if you set it up, you can't have a company between the ownership and the company and the program. The way that normally shows up is people that have holding companies or some weird trusts or stuff like that. So a lot of times people will set things up for tax purposes to avoid paying lots of taxes, but then want to benefit from a government program and then get very upset that we have a requirement that lets them get less tax avoidance. And so you can sometimes have a trust be an intervening entity, but I put up there, it's a really specific type of trust. And in those cases, those trusts are, for the most part, functionally equivalent of direct ownership. The other one that comes up a lot when we're talking about ownership is unconditional. There's a general understanding of what unconditional is. And then there's just also a general misunderstanding, a little bit with the general public, about the various types of conditions that can be put on equity throughout, the United States. So what we're looking at with this is, on paper, I'll give you the general overview, here of one of the things that when SBA is writing regulations and when we're interpreting regulations, we're trying to write regulations that encompass, and for the most part, most companies, and especially most small businesses, will generally automatically fall into the eligible category without having to do much work, but also write the rules in a way that basically makes it harder for basically bad actors to exploit loopholes in our system. So we tend to write with a goal of encompassing as many as possible, but kind of having little key languages here and there that keeps people from doing crazy things. And unconditional is one of those. So I have some examples, but I can give you I have dozens of these, maybe hundreds of crazy things I've seen. Probably one of the most common ways to be extremely weird and tricky is you basically have where service-disabled veteran basically owns the company. I use quotation marks. You didn't see it. But he can't sell, transfer, or anything else, and all of his minority partners can.
We've also seen things where, this is one of the crazy ones, is the purported service-disabled veteran had a condition on his ownership where his sale price was locked in at like $10,000 forever. So basically, they started a company, and one set of shares, those shares owned by the service-disabled veteran, were locked in and were only ever going to be worth $10,000, regardless of how large the company became. Stuff like that we find kind of problematic, mainly because that just seems off. We also see another thing that we see are lots of issues with like distributions and basically diverting distributions to other people. Because mainly what people are used to seeing is if you own 70% of a firm and the firm made $1 million and then distributed to its shareholders the money, they would most likely distribute it that way in a manner like equal to the equity share. But that's not always what we see. We've seen ones where they made $1 million, and the way that it was structured, the service-disabled veteran was only entitled to about 3%. So we see stuff like that. We also see instances where certain things are pledged as collateral and convertible notes. Pretty much any weird type of strange transaction that you can put in there that would make it easier or more likely that the benefits of the program, which is basically growing a business, having a successful business, making money from the business, get diverted from the service-disabled veteran to non-service-disabled veteran equity holders is problematic for our rules. So we can go on to 15. All right, so control also gets pretty tricky, but I'll go over the components and then I'll once again talk about kind of how SBA looks at the issue. So one of the things when you're looking at our control regulations is there's basically two main components that might not be clear on their face, but if you understand how the rule is written, it's pretty clear. So the service-disabled veteran or veterans must have the power to control the firm. And this is what SBA does is we look at your corporate documents, your shareholders agreements, all your side agreements, and basically see if the service-disabled veteran actually has the power to control the firm. Sometimes you'll see this is like people will be like, how come you found me ineligible? I'm the CEO. But then you read their document and like you can write whatever you want in the CEO is. So you'll have a document where the service-disabled veteran is the CEO, but then a vice president has more power to basically run the company and make decisions on a day-to-day basis than the CEO. So that's always a problem. So that goes to the power. And then they must actually demonstrate that they control the firm, meaning have it on paper. You have to have on paper all the requirements that show you can, if you want to, control the firm, and then you actually have to be able to demonstrate that you're actually using that power and not basically only having it on paper, meaning there's someone else basically at the firm doing all the work that the paper documents you gave us said you would be doing. And then here's the general. So that gets into it. The management and daily business operations must be controlled by one or more service-disabled veterans. That you have to actually be doing that. And then you have the day-to-day operations and long-term decision-making. And then we get into some of the things that are key elements of control, which is you have to be like in a managerial position, like the highest officer, and you have to have relevant experience to run the firm. The relevant experience used to be kind of a problem, but it's less of now. And this isn't like you have to have decades of experience, but I'll give you an example. Generally what we're looking for is there someone else around that has more experience. So I'll give you like a worst case example that we saw, and then I'll give you kind of like more of the run-of-the-mill. We had one case, this was a long time ago, but it was actually like a high-tech IT firm, not like an IT reseller, an actual like software company. And the service-disabled vet was a hairdresser as of 2 weeks before starting the firm, did not have a college degree, and the minority owner had a master's degree in software engineering and had 25 years of experience doing the exact work that the firm did. So that's just on its face a problem. So that's kind of what we're looking at. What's more common is that the service-disabled veteran has a little experience but not a lot, and then there's someone else that has most of it. So those are a little bit trickier, and we deal with those on a case-by-case basis. And then I didn't get into this, but we do have different requirements for control with regard to partnerships, limited liability companies, and corporations. There are little unique differences with each because the different structures. But I point out what the main one is because of the way corporations are structured, and they're more of a legally formal entity with their formalities. We also require that the service-disabled veteran be able to control the board of directors. And there's a bunch of rules with regard to that. It can get tricky in certain instances, but for the most part, it's not. If you're doing things like naturally, you'll probably fall into it. One of the things that we do run into with control is not that people are doing anything on purpose wrong, but because of the unique nature of some of our rules, some people will get like forms off the internet or something and just copy them, and those rarely work out well, but they're usually able to fix them pretty quickly, and that's usually just the case. It goes back to one of the two main components. We'll have a firm where it's pretty clear that the service-disabled veteran's actually running the firm, but the corporate documents are off because they didn't actually take the time to make sure that they meet the requirements of our rule. So we run into that more often than one would think, is just kind of not a lack of care, but a lack of understanding the process and thinking, this will be okay. We can go on to 16. So here's control continued. So one of the things is like when we changed the rules at the beginning of this fiscal year, we did make some changes to control. If I can give the best explanation for it, it's kind of like a balance between the way SBA likes to write rules and the way VA likes to write rules. We were kind of trying to strike a balance so that we were both comfortable. VA really likes to have like bright line rules, like yes, no. If this happens, that happens. But SBA doesn't really love that because, as I mentioned before, there's so many variations that we can see that accounting for all instances of what might occur is just really not possible. So we kind of like to give more indicators of like what we think is, our overall policy. I'm not saying one way is right or one way is wrong. It's just, kind of a different approach to rulemaking and regulations. So we got into a little bit, and I think it's a pretty happy combination. It's what Congress asked us to do was combine the rules in a way that both were happy with. SBA was happy, I believe VA was happy that we addressed everything. So one of the things that comes up with control is, one of the big ones is controlled by non-service disabled veterans. So what SBA did is on some of these things we added what we call rebuttable presumptions, which we kind of like highlighted some of the main issues that we've run into over the years, and basically just said these aren't by themselves a bar to being eligible for the program, but if you're going to fall into one of these categories, you have to actually provide evidence to SBA that you meet the requirements. You're not going to default into eligible. So the other thing that SBA looks at is if we're going to say another, like the service-disabled veteran doesn't control, we generally look for, is there another person actually controlling? And so we have a bunch of different rules about, over-reliance, financially tied to them, things that would lead someone that's a service-disabled veteran not really being able to exercise control in like an unfettered way. So here's an example of the rebuttable presumptions. So basically we don't have what would be called a full-time devotion requirement. But what we did say is if you're not working for the firm during normal business hours of that firm during its, which is standard for that industry, we're going to assume that you don't control the firm. That doesn't mean you're not eligible. It just means that you're going to have to demonstrate to SBA affirmatively how, given that situation, you do control the firm. And one of the things is this has just come up over and over and over again over the years, and firms that don't have a problem rebutting the presumption don't seem to complain that much. Firms that do tend to complain a lot. The other one's a little bit more, controversial, but once again, it doesn't mean you're not eligible. It just means you have to demonstrate that you are eligible. This one has to do with being located near where the firm's office is. So over the years, SBA, and one of the issues is, I'm going to get into the weeds here, is we had a really old OHA decision, which we agreed with, which was in a certain industry in construction, we had a firm where it was a very light resume on an individual, meaning he didn't have a lot of experience, but he did have some, so we weren't going to say no on the experience one because the individual did have some experience, but just not as much. But he didn't have as much as like the other people and the other officers in the firm. And the other thing is he was located on the East Coast, and the firm's headquarters and all their work was located in California. And SBA was just like, well, how are you, actually operating the day-to-day? And it was a construction firm. And so we asked the question, and their answer to how he was controlling the day-to-day operation wasn't good enough for SBA, so we just found him ineligible. OHA agreed, but then later OHA limited that decision to only construction, which made it weird. So basically what we did is we basically just took that case and expanded it to everybody, which is if you're not located near where your office is and where the work is done, doesn't mean you're not eligible. We have to give us an explanation of why this works. And like I said, if you don't have someone else doing all the work for you, it's probably not a problem. We also added what's called an exception for extraordinary circumstances, which is a lot of times what you'll see in operating agreements and bylaws is what are called sometimes supermajority voting requirements, or basically you own a majority of the firm, but it takes more than a majority of equity holders to take an action. And you see this all the time. So this is one of those ones. This is a bright line, which is you can only have those circumstances where the service-disabled veteran needs a non-service disabled veteran equity holder to basically take an action in these 5 circumstances. So in these 5 circumstances, you would need either a supermajority or a unanimous vote of equity holders to take an action. So we limited it to these 5 circumstances. That might expand over time. It might not, but we started with 5. So 16? Oh, we're on 16. 17. So we get a lot of questions, at least SBA does, about joint ventures. So over the years, probably over the last 4 or 5 years, the joint venture regulations in the various programs have changed over time. And for a little bit of time, SDVO was a little bit / substantially off from the joint venture regulations in 8A. It was causing a little bit of confusion. So what we did, I don't have the date for this rule, but it was pretty recent, about maybe last 18 months, 2 years. We've, for the most part, standardized the joint venture regulations across all the programs. They're not exactly the same, but they're mostly the same. And basically what that means is if you're a service-disabled veteran company, you can joint venture with a non-service-disabled veteran company. Provided you follow those regulations and all the requirements, that joint venture can bid on a SDVO set-aside as if the joint venture is an SDVO, even though only one member of the joint venture is. So that's kind of the benefit of that. And then there's also the all small and 8A mentor protege. Once again, that means those participants can take part as an SDVO if all the requirements of the various things are met. This isn't a training on joint ventures or mentor protege, so I didn't get that much into it. But if you have questions, you can feel free to ask. Sometimes joint venture stuff can get pretty tricky, but I think it's gotten much simpler over the last probably like 12 months as the rules have really come into convergence and been more the same. You can go to slide 18. So this is just a little slide on what is an SDVO contract. So basically, between micro and the micros purchase and the simplified acquisition threshold, so mandatory set-asides and parity. So basically, an SDVO contract under SBA definition is when you restrict the competition for the contract or order to an SDVO. And then above this at parity as well with the market research. So there is sole source authority in the Small Business Act. I listed the requirements for sole source authority. So one of the issues is with this isn't the same as 8A sole source authority, which is one of the key issues is there has to be, if you have two SDVOs that can do the work and your market research shows that they can do the work, you can't limit it to only one of them. So it just, if there is only one that can do it, you have kind of an easy route to sole source. It's probably, it's a very easy way to sole source. It's a pretty easy justification in that you don't have to really give one. But there is kind of the requirement that there will only be one. So I'm not sure how often it's used, but it exists. Slide 19. As I mentioned before, at the very, very beginning, SBA does not pre-certify firms for the government-wide program. We allow self-certification, and then the primary mechanism for basically ensuring eligibility with our requirements, we ensure eligibility with the requirements at the contract level. So we don't, this is my personal opinion, not for attribution to other people, to the entire agency. One of the issues that you run into with certification programs is you end up certifying people that end up using a lot of government resources to certify people that aren't going to get government contracts or even plan to get government contracts. So one of the things this does is we're looking only at firms that have government contracts, that are actually participating in the program. So here's some of the key components, which is basically anyone that's an interested party can challenge. There's some timeliness issues that come up. There's some big ones involving. There's some big timeliness issues kind of floating out there with regard to multiple award contracts, scheduled contracts, and orders. SBA had an opinion. SBA's Office of Hearings and Appeal had an opinion. It was different. Lots of people have an opinion. So that's just out there. I don't know how common that is. But one of the things is, even with the timeliness issues that exist, SBA and contracting officers can always file a protest. We have no restriction. I would also like to point out some of the interested party and timeliness issues for SDVO. If you're familiar, and for status protests in general, it's slightly different than size. So it's not exactly the same, which can be confusing. But I'm just pointing it out. There's a little bit slight difference in who's an interested party and what timeliness standards apply. The other thing that's really important, at least for SBA, because we don't pre-screen everybody, is we only actually process protests that raise a genuine issue about someone's eligibility. So someone has to actually give us a reason to go looking for. And one of the reasons is it's a lot of burden on a small business to go through one of these protests. These protests collect a lot of information, and we collect it extremely quickly, and if you don't give it to us extremely quickly, we find you ineligible. So basically opening every bidder up to that on every contract seems a little bit unreasonable to SBA. So in order to start a process that has that much of a burden, we ask that the person protesting actually provide a genuine, real reason to go through that process. The other thing is with SDVO, we have an independent appeal right to SBA's Office of Hearing Appeals. They have a different timetable and some different rules. And then you can go on to slide 20. So I'll bring this up just because I get a lot of questions on it. I just bring it up. So there's been talk from lots of different people about VA and SBA and merging the programs and all that other stuff, and whether or not that's happening. So what ended up happening is just the honest truth is SBA has talked with VA and we've looked at it, and it's been considered, but it's not something that's easy to do or cheap to do. So that's one of the things. So if it is going to happen, and it's something that SBA and VA cannot do on their own. That was just one of the things we looked at. We always look at with the government, can we do something without having to go back to Congress? The answer in this case is no. So one of the things is it would actually need Congress to step in and do it. So we gave that answer. So that's generally the answer. We looked at it. It's not very simple. Basically SBA and VA programs are different. Our methods of doing things are different, and just in general, transferring things among agencies just is never inexpensive, and it's never really as easy as everybody thinks. So if it does happen, it would be a multi-year process. That would require a legislative change. So number 21. And now we're on to questions. There's not that many, so I can just read. I'll probably just go through them all if people don't mind.
Okay, that works.
So ownership and control question, slide 11. Is there still a regulation that states a veteran-owned or SDVO company owner can sign over control to another individual in the case of incapacity of the service-disabled veteran? Yes, although there's always been a caveat with that. That's not any service-disabled veteran. It's only, let me make sure it's still correct. This is the lawyer in me. Where is it? Give me 1 second. If you guys don't mind, I'd like to give. So it's limited to, there's a definition in SBA's rules, which is a service-disabled veteran with a permanent and severe disability. So it's that. And then there's with surviving spouse. But if you give me a second. So if you look at 125.13 and the control and stuff, so they would still have to own the firm. They can't transfer the equity. But if you basically have, so it's not open to all service-disabled veterans, just ones with severe disability, which is defined. They can basically, and just to give you an indication, that's usually people that are basically incapacitated. They can continue to own the firm, and then they can pass over the control rights to someone that can do it on their behalf. So that still exists. That's in 125.13. And then the definitions are in the definition section. So the next question is how the 51% ownership rule applies to employee stock ownership plans. So ESOPs are difficult. So the ESOP most likely can't 100%, this is my caveat on everything, it's a hypothetical, so everything's a little bit different, but generally the way that an ESOP has to be structured to meet the requirements of that thing, it would be very difficult for the ESOP to own 100% of the firm. So one of the things that would have to, you can still have an ESOP, but you would either have to move it into another share. You either have to, sometimes it's easier to have multiple shares of stock, and do things with that, or just have it have like a lower percentage. But yeah, you still ESOPs affect direct ownership. So one of the things you would have is the service-disabled veteran owning a certain number, over 51%, and then the ESOP owning less. And then you'd have to deal with, I didn't get into the weeds, but we have a present effect issue, which is basically stock options and other sorts of convertible type instruments, like convertible debt, we treat as exercised. So one of the things that happens with employee stock ownership plans is if you don't structure it just right, basically we end up giving present effect to like years and years and years and years worth of options, which basically ends up diluting the veteran shares. So you are able to structure it correctly. You just have to do the work. And I don't work for people that structure them. I could structure them if I wanted them to, but I generally don't give people advice on how to structure their companies. So the next one is a sole source contract award to any SBC, including an SDVOSB, a small business set aside, and it is then subject to the limitations on subcontracting if it meets the applicable FAR LOS. Yes. So there's no statutory authority to do a small business sole source. So that's the first. So this is the answer. It depends on the justification used for the sole source. If you're using the sole source justification for SDVOs in the Small Business Act, so then that's where you're getting your authority to restrict the competition. That authority, if you're using the Small Business Act, and then you're sole sourcing it to an SDVO, and you use that authority, that means you're going to come under the purview of SBA and SBA's rules. Yes, the limitations of subcontracting would attach to that sole source if you're using the Small Business Act authority. Slide 19, time frame for protest. It's in the FAR, so no. I don't think you need to incorporate the entire FAR into the solicitation. Technically, this is my opinion as the lawyer, if you give notice of it being a set-aside, the relevant FAR provision should give notice to people of their rights. But that's me as a lawyer. People should go read solicitations and read what their rights are. The FAR is public. People can go read it. The contracting officer told them it was a set-aside, so therefore they should be aware and be on notice of what their legal rights requirements are. Is there a wait time after non-veteran transfers ownership shares to make the veteran a majority owner before the company can apply for verification? Verification is a VA issue. I have no idea. For SBA, if you accomplished that transfer prior to submitting an offer on award, so SBA determines time of eligibility for a contract at the time of offer. So if you complete the transaction prior to offer, we would assume the transaction took place and it would be fine. But with regard to verification and pre-screening, that's a VA issue. What are the regulations specific to the surviving spouse? I can give that to you. There are. So you can have it. It's 125.12I, and basically the surviving spouse gets to basically one. There's a thing. The surviving spouse. There's requirements on what type of service-available veteran you are. And basically, yes, if you meet all those requirements, the ownership can be transferred to your surviving spouse, and she can maintain eligibility for the program, for VA and SBA's program, which I'm not in charge of all of this, but until she remarries, until she relinquishes her ownership interest, or 10 years. So there's or, and that's in there too. Next question, regarding the rule of two, is it allowable to apply geographical limitations For example, market research shows 10 companies nationwide, but only one SDVO who is qualified within my SBA servicing district. Would that permit sole sourcing to that one SDVO? The answer to that question is yes and no. Does the market research show that only the SDVO in your district could perform the requirement? If that answer is yes, then yes, you can sole source. So it's like one of those things is like, oh, can I geographically limit my thing? It's like, does your market research show that you have a requirement to do work in Maine, and it's unlikely that someone from Florida will be able to do it? That happens. Like, say, I'll give you an example. Say you want to take a Coast Guard boat and get it repaired at a dockyard. A dockyard in Florida probably isn't going to be able to do it. So that's not a geographic limitation. It's just the statement of work, and that dockyard in Florida can't do it. So it's not, you can't generally do like only companies that live in Maine, that reside in Maine can bid on this contract, but there are contracts where there will be limitations in terms of who can do the work based on what the requirements are. So I hope that answers the question without telling people. So quick answer, no, you can't limit it by geographic per se, but you can have, requirements and do market research. And if the market research says that only this group of people can do it, then you can limit it. Does the veteran have to have an honorable discharge? SBA doesn't answer that question. They have to have a letter from VA or other documents saying that they are a service-disabled veteran eligible. One of the reasons is I think you're right that they have to be, but I'm not 100% sure. That's why we get the documentation from the other agencies. Okay, so this last question was, how can that be if the SDVO holds a critical technology and the cost of technology is below the limitations of subcontracting? That happens frequently under the SBA, SBIR, STR programs, and under FAR 6. Only one reasonable source and no other supplies or services will satisfy agency requirements. That's a different justification for sole source, is the answer to that question. That's a different statutory one. So that's what I'm saying. If you use a different statutory reason for limiting sources, limitations on subcontracting don't apply. Only if you use SBA's authority, only if you use the authority granted under the Small Business Act. Okay, like I said, I will defer to VA for who they determine is a service-disabled veteran. Oh, the last question was, I think it was further up, there was a question about, it was a follow-on question to an answer I gave regarding sole source or limited sources and the limitations on subcontracting. And the question was, does the limitations on subcontracting attach any time a service-disabled veteran is awarded a contract based on limited competition? I said, anytime it's restricted under the Small Business Act, the answer is yes. That's just the rule. So the next, and then the follow-on was mentioning the SBIR program and FAR 6.3, and basically using, I forget the statutory thing, but the reference was FAR 6.3 and only one responsible source. That's an independent, basically exception to competition that exists outside the Small Business Act. So if that happens, if you have an independent justification for restricting competition and you're not using the Small Business Act to justify the restriction, then the limitations on subcontracting don't apply. And I hope that answers the question. If not, maybe I can talk more with the individual that had that. I'd be happy to talk about that issue. Did I get everybody's questions? And it seems like some people answered the honorable question. Like I said, I don't know the answer, and I don't like to step on VA or DOD's toes with regard to who's actually eligible to be called a service-disabled veteran.
Okay, and so Chris, what we'll do is, that appears to be the last of the questions. I see there's some discussion afterwards with that in the chat box. However, I'm going to go through, there's a couple slides after for SBA quick reference guides. There's 2 slides here, so if anybody does have additional questions, please type them in the chat box now and we'll try to address them by the end of today's program. But I'll just go over this quickly, a couple slides. So this is a summary of CFR regulations. On the left, you'll see the specific topic you might have and where you can locate it in the CFR. In this case here, we have the service-disabled vet, 13 CFR 125.15b, as part of today's discussion. And there's also a whole list of other topics as well there. On to slide 24, this just gives you kind of an outline of SBA offices and their location and what their responsibilities are. So within SBA government contracting area offices, that's what I'm a part of. I am one of the procurement center representatives. There's also commercial marketplace representatives, CMRs, and they fall under the area offices. We also have SBA district offices, which are located all throughout the United States as well, and that's where your business opportunity specialists are located. Then you also have the SBA regional offices, and those fall within the specific regions as well, and then SBA headquarters located out in D.C. And Chris, you're at headquarters, correct?
That is correct.
Okay. So if you follow those links, there's additional information on those as well. So it looks like there are no additional questions. So just want to have a couple reminders here. Our next session will be on, somebody just snuck one in here. Okay, Chris, did you see this one? It says, does the self-certification documents need to be uploaded to GLS or certified at SBA.gov?
No, they do not. That was the only thing. If you know the women's program, there is a requirement. There was, and we still hold to it, a requirement in the statute that required, like, basically providing the government with documents. So those go in certified.gov to satisfy that statutory requirement, but the SDVO program doesn't have that, so we don't require small businesses to go through that process. Okay, great. So just want to remind everyone, our next session will be the second Wednesday of August, so that's August 14th. Expect to get an email invitation from that here later this month. And I also want to have a thank you out to Carla, our moderator. She's been our friendly voice for as long as I've known, and she is stepping away. And so I just want to thank her and just show our appreciation at SBA. So, Carla, thank you very much for being there for us and all the support you've given us in the program. And, yeah, thank you. And once again, Chris, thank you for joining us here today, and we appreciate all the participation on the call today. So we will talk to you next month.
That concludes our conference. Thank you for using AT&T Event Conferencing Enhanced. You may now disconnect.